ending stream, so we got to cut off. It's 10 o'clock, so let's get started. Good morning, everyone. My name is Sharath Martin. I'm with ACCA. In all my 3 decades of working as an accountant, I've never seen a room full for people who want to understand standards. I'm guessing that most of y'all are not accountants. How many of y'all are accountants? See, even the hand goes up also halfway. Don't want to admit. Okay, so I think we will assume that most of y'all are not accountants, which doesn't mean that you don't understand standards. So this morning, we are actually very pleased to have Pam to give us maybe about 30 to 40 minutes presentation on these 2 standards, S1 and S2, which, as you know, is already part of the National Sustainability Reporting Framework. But beyond that, and I don't know how many of you have operations beyond Malaysia, but in ASEAN, if you go by GDP, 85% of ASEAN economies, in terms of GDP, are adopting ISSB. So this is not a single market factor. This is not only global, but I want to say from an ASEAN perspective, if your operations are ASEAN, if your operations cut to Japan, Korea, and China, it's ISSB. In Europe, that's a different story, and we can talk about that later. In US, who knows? So today we will talk about S1 and S2, and then for maybe 30, 35 minutes, 40 minutes, and then we will have a panel session. I know you may not even be able to see me at the panel session, judging by where you all are at the back, but that's okay. I think the way I run panel sessions is considering the crowd. I want to give as much opportunity for questions from the floor, right? Because you're like here, you've committed 2 hours, you want to learn something. So while I have questions for the panelists, that's okay. I will park that and keep most of the time for the questions from the floor. So with that, I'm going to pass this to Pam to take us through S1, S2.
Thank you, Sharath. My name is Pam, and I'm a Sarawakian. Any Sarawakians here? Hi. I have a soft spot for fellow Sarawakians. But anyway, that's besides the point. That's to warm the ice. Okay, we will, by the end of the next half an hour, you will know how to sort of report based on S1 and S2. So that is the objective by end of the next half an hour, okay? Can, tall order. Okay. Okay, let's start, refresh our mind, what is National Sustainability Reporting Framework? You can take picture, feel free to take picture. The slides will be circulated to you after the session, but feel free to take picture anyway, for comfort. Okay. Just in case the slides don't reach you, right? Okay, and the certain slides are not there, etc. Okay, so National Sustainability Reporting Framework was launched by the Securities Commission last year, September. So this is a game changer for sustainability and for Malaysia as well, because it means that the IFRS S1 and the IFRS S2 they are mandatory for adoption as far as sustainability reporting is concerned. Before the NSRF, there was not really anything that's mandatory other than the Bursa Common Sustainability Matters. But the Common Sustainability Matters prescribed by Bursa has been dropped. Bursa, pursuant to the NSRF, Bursa has on 23rd December 2024 amended their listing requirements for the main market and the ACE market to align with the NSRF to mandate the adoption of IFRS S1 and S2 for the main market and ACE market players. The timeline, so Group 1, and this is very interesting, I thought, the way the Securities Commission launched this is very, very creative. Group 1 is for main market above 2 billion market cap. So as at 31st December 2024, that's the cutoff. The 1st December 2024, if the market cap of your company is above 2 billion ringgit, then you shall be in Group 1. And Group 1, you must do IFRS S2 this year, financial year end, 2025, December. Must do S2. Minimum is S2 must buat dulu. S2 kena buat dulu. S1, you can have 2025, 2026, or latest by 2027, you get the S1 done. Why like that? S1 a bit more difficult. I'll explain further. Scope 3, greenhouse gas. Scope 3 greenhouse gas also has been given relief. By 2027, if you are Group 1, your Scope 3 greenhouse gas must be disclosed in your sustainability report. S1, S2, Scope 3, they are different thing. Different thing. Scope 1, Scope 1, Scope 2, Scope 3 dengan IFRS S1, S2 is all different thing. We don't confuse, but I will go through that. Okay, Group 2. Anybody from Group 2 here? Because Group 2, is for main market listed companies that are smaller, below 2 billion market cap. So delay 1 year for the main market companies that are below 2 billion. So 2026, you do the climate reporting under IFRS S2. Then I think you have you can do S1 as well, but you've got 2 more years to do S1 up to 2028, and then Scope 3 you have until 2028. Lastly, for Group 3 is very interesting. It's ACE market and non-listed companies that are above, that has a consolidated revenue, group revenue of above 2 billion ringgit. So if you're not listed, you also have to do IFRS S1 and S2. Sorry, if your group revenue is more than 2 billion ringgit. So these are all the MNC punya subsidiary lah. All need to do IFRS S1 and S2. Okay, so that's the reporting as far as S1, S2, the timeline. Any questions on the timeline? No? Then we move forward. Okay, so what is S1 and S2? This is not Scope 1 and not Scope 2. Different thing. Scope 1, Scope 2 is greenhouse gas saja. This one, IFRS S1 and S2 is a coincidence there. They are also called S1, S2. So the whole market is kind of like confused. Scope 1, Scope 2, is it the same as S1, S2? Different. So what is S1? S1 is sustainability. S2 is climate. That's the difference between these two. Which one is easier? S2. Why this group so interesting one? Most people would say S1 is easier, because they think sustainability easier lah. Climate is a technical topic. We are accountants, no accountants. What do we know about climate, right? But the regulators around the world, not just Malaysia, the regulators around the world, they feel that S2 is easier. Therefore, because it's more in-depth, more specific to climate, so you get the climate thing done first. For IFRS, you make sure you get the climate one done first, because the other sustainability topics, you still have more time. Of course, you can get it all done at the same time. Okay, so S1 is sustainability related financial information, and S2 is climate. So which one you want to go through first? You want to do S2, easier one first. So easier one is S2, is it? S1 first. Okay, never mind. Actually, S1 is harder lah. So let's just go through the S1 first. S1 is also, you have more time to do. So it's not as urgent as the S2. But never mind, let's go through S1 first. Okay, S1, S2, they all follow these 4 content pillars: governance, strategy, risk management, and metrics and targets. These 4 pillars are synonymous in our daily life at work. At your workplace, do you have governance or not? You have. You got policy, procedure, SOP, some more, right? And you got board oversight, management oversight, policies and all that. So that's governance. So governance is straightforward. Strategy and risk management usually come together, because we have to do the risk assessment, we have to do the opportunity assessment, and then we have to quantify the financial impact of financially material topics, right? That's what we need to do under S1. So number 1, we need to identify the risk. Number 2, you need to identify the opportunity. And number 3, quantify the financial impact in the balance sheet, income statement, and cash flow. So that is this part lah. Strategy and risk management, we normally try to put it, explain it together. Lastly, metrics and targets. There are some prescribed metrics that we need to report if you fall based on your industry. So every industry has a different sustainability metric to report under IFRS. But there are also the cross-industry ones. So this one a bit dry, but just let us push through this one. S1. So S1 is about sustainability-related risks and opportunities that can affect the financials of the company. For accountants, this is cash flow, access to finance, cost of capital, balance sheet, income statement. All right, but for non-accountants, basically financial impact lah. For the current period and for the future, short term, which is 1 year, medium term, which is maybe 5 years, and long term, which is more than 5 years. So this is the what is required to report. Basically, the financial impact of ESG over the short term, medium term, long term. So need to quantify the financial impact or not? We need to quantify the financial impact of all these sustainability risks and opportunity. How to do it? That's the question. So the standard says the effects of the sustainability risk and opportunity must be quantified. It says it requires the disclosure of quantitative and qualitative information on sustainability related risks and opportunities that affect the financial position, which is balance sheet, asset and liability, that affects the financial performance, which is profit and loss, revenue, costs, and expenses, and financing costs, etc., and cash flows. Cash flows is a result of the financial position and performance, right? Any significant risk of material adjustment within the next annual reporting period to the carrying amount of the asset and liability. So for non-accountants, in the balance sheet, there's asset and liability. If there is any of the sustainability risk and opportunity that will affect the asset value or the liability value, we ought to disclose it in the sustainability report. Anything that can affect the asset value and the liability value in the next 12 months. So that's the definition, the technical definition. But don't worry, your finance will tell you how its financial position will change, means how the balance sheet will change, the capex, the liabilities, the asset will change over the short, medium, and long term because of this sustainability risk and opportunity, and how the profit and loss, revenue and cost, OPEX and cash flows will change over the short, medium, and long term. So it's very accounting speak. Can be a good thing. Can you, so my question to you, if you cannot quantify, can or cannot? Can you live with it? Can. Xi Sheng said can. OCBC said can. Can. You have 3 excuses. If you don't want to quantify the financial impact, don't want to quantify the financial impact, and you want to write story, like qualitative information, like for example, my revenue going to increase because of new sustainable product. You just say one line like that. Don't want to quantify. Can or cannot? Can. Got 3 excuses that you can pakai. The first excuse, you can say the risk and effect are not separately identifiable. So, pakai excuse ini. So, we cannot quantify. Okay. The second excuse, there is high level of measurement uncertainty after we quantify the financial impact. We're not sure. We're not comfortable with the financial uncertainty. Measurement uncertainty. So, therefore, we choose not to quantify the financial impact. Okay, boleh juga. And the last excuse that some smaller companies use is we don't have the skills, we don't have the expertise, and we don't have the resources to quantify the financial impact. Okay. So IFRS is very kind. IFRS says that when you do all these sustainability risk assessment, opportunity assessment, quantify the financial impact, you have to do based on the level of effort that commensurate your company size. Your effort, you don't overextend yourself. IFRS say like that. You don't overextend yourself. The word is commensurate, the effort. So if you are a smaller company, you can use this excuse. Large companies cannot. Because how can you go to the world and say that you don't have skills, don't have resources, don't have expertise? You can hire people to do it. Okay, enough of this. Okay. So the question is, how do we identify the sustainability risk and opportunity? So the IFRS has prescribed a way to find this sustainability risk and opportunity. The way to find is in this pecking order. The first one is, they say that if your topic is related to climate, like you're thinking climate stuff, like climate risk, flooding, heat wave, water scarcity, then look no further, straight away go to the IFRS S2. Okay, straight away pakai, go and read the IFRS S2, which we'll cover soon. So if it's climate related. If your topic is not climate related, for example, your topic is diversity and inclusion, your topic for banks, data privacy and cyber security. This issue is a sustainability matter, because without it, The bank, if got any data breach, is serious business, you know. So this, for example, this is not a climate topic. So if you have topics that are material to the company that are not climate topic, where do you look for? So look for them. So it says you go to the ISSB standards for the non-climate topics. Of course, IFRS S2 also talks about climate topics under the ISSB. So what is this ISSB thing? ISSB. So ISSB has been acquired by IFRS already. ISSB is the industry-based ESG standards. It has been around for a long time, and 4 years ago, IFRS got a lot of money. IFRS acquired ISSB. So ISSB now sits under IFRS. ISSB has 77 different industry. 77 different industry. You will be hard-pressed not to find your industry here. You know, so if you are semiconductor, there's a semiconductor standard telling you what metrics, what sustainability topics you need to disclose. There are many. There are 77 standards. And you can find, for example, I give you 2 examples here. If you are a property developer, right? Property developer, or you run a hotel, property investment, then you will take this ISSB standard for real estate. And under this particular standard, ISSB standard for real estate, they have already prescribed what are the sustainability topics that you need to report, what are the metrics you need to report. And the whole real estate industry report the same thing, you know. So real estate report the same thing, and then property, banks report different things. So another example is banks. For banks also, commercial bank, merchant bank, or money lending business, you can follow this ISSB standard where they have a list of topics. So if you see how IFRS does it, they just want comparability. Because investors need to evaluate different companies. Each industry is different. So they realize that ESG for every industry is different. Okay, so that's the quick one on IFRS S1. I want to pay more attention to IFRS S2. So let's deal with IFRS S2, climate. Are you ready? Yes. Okay. What are climate risks? I think some of us think of flooding, right? So I think flooding is one of the hazards under physical risk. So there are 2 types of climate risk actually. Most of us can see. We can see with our own eyes the physical risk, because physical risk is happening. The wildfire in California, the Taman Sri Muda flooding in 2021, and I think recently the Putra Hai also got fire, but that is not climate change related. Okay, so these physical risks are, our climate is warming, our icebergs are melting, the sea level are rising, it's getting hotter, the sea level rising, and flood will be happening in the long term, right? So these are physical risks, and these are the hazards, right? Transition risks. We talk about climate risk, but seldom, if you first time hear of climate risk, you only think of flood risk. But for those which are already doing climate risk here, transition risk is key, is the key. What is transition risk? These are the categories. Policy risk, because government is going to introduce a lot of policy, right? And technologies changing. We have EV now. We have batteries getting cheaper and cheaper. We got solar getting cheaper and cheaper. So all these things are changing. Transition means what? A transition means change. The only constant in life is change. And change brings us stress. Human beings don't like change. So that's why it's a risk. It's a risk because we don't like change. For example, if Anwar tomorrow announced that every sector is going to get carbon tax next year, $25 or 25 ringgit carbon tax next year, everybody, each sector, I think all of us cry, and then, the cost of doing business in Malaysia has just gone up by a lot. For example, the tariff, right? Trump introduced the tariff. The cost of doing business in this world just suddenly shot up, and there's so much uncertainty, especially those who invest in stock market, right? Okay, so those are transition risks. When there's change, we get heart attack, then that's a risk. Okay, so these are some examples of transition risks, regardless of the industry. Policy and legal risk, we have carbon tax. That's the main one. When we do climate risk assessment, we must do the carbon tax exposure of your company. Now, if you are a bank, what is the carbon tax going to be like? Then, and the other one is the removal of petrol subsidy. Anwar has announced that the T15, for the T15, RON 95 subsidy will be removed, right? So does it affect corporate? I think staff claim, I don't know who is T15 lah. You know, T15. So there's some impact one we need to assess. So when we do IFRS S2, we do climate risk assessment, we have to assess the financial impact from the physical risk and from the transition risk, you know. And transition risk got so many things. Of course, first year when we are doing IFRS S2, we don't need to do everything lah, all the lock, stock and barrel, no need to do everything. At least the carbon tax must be done. You know, the carbon tax exposure must be quantified. And carbon tax is levied on scope 1, scope 2 or scope 3. So first, you want to calculate your carbon tax exposure of the company. You need to know how much is your emission of the company, right? How much is your scope 1? At least minimum, because the carbon tax will be levied on the scope 1 emission. So if you know your scope 1 emission, greenhouse gas emission is how much, you multiply by X ringgit per ton of carbon footprint, then you can get your carbon tax exposure based on these assumptions. Because Malaysia has not announced how much the carbon tax is going to be. Sarawak has already have the legislation for carbon tax, but they haven't even finalized how much the carbon tax to charge. So we have to use some assumptions. These are all assumptions. These are the risks that haven't materialized. So we need to use some assumptions. Technology risks. Okay, technology risks are like solar panel getting cheaper. Wind turbines are very much cheaper now. Our EV battery is all cheaper. In fact, next time the EV will be cheaper than the MyV. Who knows? Right? It's changing, right? So is that a risk? It's a risk to automotive companies, right? And it's a risk, all this solar panel, wind turbine getting cheaper, it's a risk to the oil and gas sector also. So can be a risk and opportunity to some people. But for most of us, we can install solar panel on our rooftop. That's an opportunity for cost saving, right? We invest CapEx now, payback period 7 years, 8 years. We get the cost saving after the break-even point. So okay, what? Okay, so that's it can be an opportunity. Reputational risk and consumer pressure. So coal power plant is enemy number 1 now. No banks will finance new coal power plant now. So enemy number 1. Enemy number 2 today, as far as ESG is concerned, is oil and gas. Sad to say. At least the oil part lah. The gas still transitioning field, still clean. Okay. Oil and gas is enemy number 2 now. So if you join oil and gas company as a C-suite, then you need media training, you know. Because another enemy is plastic lah. Plastic also become demonized already. Plastic liners, okay, vegan and plant-based meat. Some people have chosen to become vegetarian and drink soya milk only because they say we don't drink cow milk anymore. Because cow milk comes from the farm and there's a lot of methane emission from the cow lah, you know. So there was this story from a cargo plane pilot, because the cargo plane pilot need to fly for Haji purpose, all the cow fly to Singapore or Hong Kong for Haji lah. Haji. So the cow, but when at mid-air, all the livestock, the cow on the cargo all boot, then the alarm, the cargo plane alarm just ring non-stop. So they have to switch it off. Because too much methane already. Okay, anyway, I'm joking. Market risks are like growing concerns of just transition. Market risk, it means, for example, Petronas. We know it's oil and gas, but a lot of environmentalists want Petronas to be shut down overnight. Can Petronas be shut down overnight? No lah, you know, because if you shut down Petronas overnight, then is that a steady way to transition? No lah, you have to compensate all the oil and gas companies, employees, everybody. The government, if they do that, they have to compensate everybody. So also market risk is also like certain parts. For example, Putra Heights is not a good example, but I'm just saying, if Putra Heights now, yesterday there was a news saying the property value at Putra Heights dropped 20% because of this incident, right? So this is just saying that if there are certain places in Malaysia that is low-lying and always flooded, climate change is going to make it worse for the property there lah. value there. And if it's like a big area, then that's a market risk to the bank because all the collateral is there lah. Okay, so we introduced that already. Let's do a climate risk exercise. Okay, I know we don't like exercise, but that's the only way we can learn, you know. Okay, this is a template on how we do physical risk screening. This is the template lah. I provide a template because all of us like template. You like template? Okay, physical risk, we list it down. Let's say coastal flooding, water stress. So these are the two that we will consider in the Malaysian context. Let's keep it simple first. Just flooding and water scarcity, two things. Then for this one, you need to score based on each of your location. Each of your property location, let's say your house, your office, your plant. You think from these two. Is it low risk for flooding, medium risk for flooding, high risk for flooding? Where is your property? You know, where is it? And what is the impact if it's flooded? What is the impact to business if it's flooded? What is the impact to financial statements? And how do you respond to the risk? You buy flood insurance, or you relocate your business from low-lying place to a higher place. This is the template lah. So if you can fill up all this, then your reporting is half done already, right? Okay, water stress. So water stress, some of the food and beverage company, factories, you need water, right? You need a lot of water. So water scarcity can be a higher risk for some of those companies. It depends on where you are. So if you are in Kedah, I'm sorry to say, today also got problem, the water issue, right? So Kedah, from a Malaysian standpoint, Kedah is a little bit scarce on the water lah. Okay, yeah. So if your asset is there, then your asset will be low, medium, and high. Will be higher risk lah. Depends whether your asset need water or not. If your asset is just domestic purpose, you need the water for domestic purpose and not for manufacturing, then okay. You know, then so the risk, how do you score the risk 2030, 2050? How do you score the risk? All of your companies have a risk management framework, right? Enterprise risk framework, you got likelihood, you got impact, all those stuff. How many of you are risk professional here? Risk. Okay, so these are the people to make friends with, Risk, you make friends with the risk, this part, they will give you the parameter, the likelihood, develop it with you, the likelihood, what's the parameter. Because we have to score it, so it's easy for me to say low risk, medium risk here, but there is actually a robust process behind determining the risk. Like likelihood and impact, financial impact, how much can determine the risk. But if you don't have that risk management framework, then okay lah, just score it qualitatively like that better. Okay, that is our climate. Okay, I want to show you an example. So let's say, who wants to volunteer an example? We use the tool, let's say flood risk screening tool now. Let me just see. Where's my mouse? Okay, wait. Yeah, okay, found it. On the other screen, is it? Where's my mouse? Missing again, right? I'm so sorry. Maybe I ask Gila. Okay. So sorry. I wanted to make it to the screen. Okay. I'm sorry. Yeah. So this is like a Google map. It's called Climate Central lah. This is free tool. If you like free stuff, then I like free stuff. So I normally use this tool for flooding, coastal flooding. So this tool is quite interesting. So you see, you can toggle the time. Let's say 2050. I want to see 2050年 2050 which part of Malaysia is going to suffer from sea level rise, coastal flooding. And you see, it's like, oh, so sad. Are you here? Yeah. So it depends on where is your asset. So let me see. So if I am who wants to volunteer the address? Your address? Property address? I put Port Klang. No need lah. Port Klang. I put Port Klang. Okay. Port Klang. I mean, this just to show how this tool works. It will zoom in there and it will show that, okay, jialat. Difficult. Yeah. So so based on, I mean, you can use any tools out there. This is just one of them. Okay, you can use paid tools as well by certain consultants or what, which are better. They refine it. It can be better. But let's say you have a warehouse, distribution center, or a plant in Port Klang. If you use this tool, then the likelihood of your asset being subject to flood risk is there. It's likely. It's possible. You know what I mean? From the risk perspective, it's possible. Therefore, the risk is higher. But it also says it depends. If it's just an office there, then you can relocate. Your gross risk, you can reduce it to a lower net risk. You can relocate, then you can still do something like. But if you cannot do something, the distribution center is there, it constitutes 20% of your revenue, it is material, then your risk is high. So that's how we use the tool, and then we try to do the likelihood and the impact assessment to derive at the risk of flooding for each of your assets. You need to do it for each of your assets. Okay. Okay, transition risk. Template, also got template. Transition risk also got template. You can have many transition risks to consider. I put in here 2 examples. The first transition risk that you can consider is a carbon tax. I think this is a bare minimum. To show that you have done transition risk exercise, your carbon tax not there, then you didn't do. So carbon tax. So as a transition risk, carbon tax, is this medium risk or high risk to your company? How do we do it? We need your scope 1 emission. So based on your scope 1 emission, let's say it's 100,000 tons. 100,000 tons in 2024. Your scope 1 emission is 100,000 tons. Let's say, we assume 25 ringgit per ton that the government, Malaysian government is going to introduce. Let's say 25 ringgit. Why 25? Because Singapore is $25. So Malaysia should be 25 ringgit I think. So just have an assumption first. 25 ringgit times 100,000 tons. It will be 2.2. What's that? My math very good. Not very good as an accountant. What is 25 times 100,000? Because I'm nervous here. 25, 0.25 million. 2.5 million. So 2.5 million will be the carbon tax exposure. Thank you. 2.5 million. Is 2.5 million low risk, medium risk, or high risk to you based on your enterprise risk framework? It depends on your company. For a lot of companies, 2.5 million is okay. If you're a large company, okay. It's insignificant. Impact is insignificant. Then it will be lower risk. So that's how we do it. Then what is the impact to business? Well, carbon tax comes in, it will affect your profitability. It will affect your OPEX, the tax flow line, the tax line. Response? There's only one response. There's only one response to the carbon tax. You must say, we will reduce our greenhouse gas. We will have a transition plan, develop a plan to reduce the greenhouse gas to meet the aspiration of the Malaysian government. Only one response. Okay. Let me check the time. Okay, I got to end soon also. Okay, renewable energy is an opportunity, and I think we also assess whether it's a low opportunity, medium opportunity, high. We need to assess both risks and opportunities. So renewable energy, solar panel on your rooftop, your plant rooftop is a real opportunity. It just depends on whether you're keen. So for some companies, it's not really an opportunity because they don't have the roof. And if they put also, it cannot cover their energy usage. So maybe it's not a great opportunity. Okay, so for IFRS S2, it's not just about the climate risk assessment. Climate risk assessment done, there's still metrics to be reported. So these are some of the metrics to be reported across all the industry. So we call this cross-industry metrics. The greenhouse gas scope 1, 2, 3 have to be quantified. The climate-related risk, transition risk, you can disclose how much of your business is affected by the carbon tax. Like how much, which business line is affected by the carbon tax, for example. Like if you are Proton, you can say that or most of your sales of the ICE vehicle, that whole segment is going to be at risk because of the transition. Okay, climate-related physical risk. You at minimum, you have to say out of your balance sheet item, the assets, the list of properties that you have, which one has flood risk, which one has water risk, water stress risk. At minimum, you must put the number. Like one out of our 10 assets has coastal flooding risk by 2050 based on this particular tool, for example. Yeah, you can disclose like that. Otherwise, you disclose the net book value. How much net book value is exposed to flood risk? Climate-related opportunity, I think you can say that, okay, if I'm Proton, I would say that my EV business, my emas tujuh. My emas tujuh constitutes 1% of my revenue, so that's the opportunity. It's growing. 1% of my revenue now, but growing. Okay, just saying. I don't nothing to do with Proton. Okay, capital deployment. How much capex, opex have I invested into this climate risk and opportunities thingy? Internal carbon price. If you have, then you disclose it. If not mistaken, there are only a few companies in Malaysia that has an internal carbon price. Sunway, Gamuda, any more? Remuneration. So whether how much is the bonus that is of the senior management and board that is tied to the climate KPI? How much? If 0%, then 0. If it's 5% of the KPI is tied to climate targets, then just disclose 5%. So I think that's the remuneration. I think the explanation is there. And IFRS S2 as a climate standard also goes by industry based. So let's say if you are real estate, then they have a few more metrics to be reported if you are a real estate company for under climate. If you are banks, for example, you're a bank, then they have extra topic, climate topic for you to report. Like for example, incorporation of ESG into credit analysis. So this is an extra topic that we report. Okay, in the interest of time, I think I've covered the gist of it already for IFRS S2. And what I wanted to say is, I think ACCA, we view that connectivity is actually very important. I mean, you can be doing ESG and all that, but if you don't think about whether the ESG affects the financial statements, then it's missing. Something is missing. Because if you think of ESG without the financial lens, it's not connected one, you know. So moving forward, it's definitely everything should be connected. If you're doing ESG, whether you are accountant or not accountant, you have to connect it to the financial impact. Because if it's not worth financial sense, not making financial sense, not having a financial risk, then why are you doing ESG? So we want to make it connected. So the IFRS sort of make it connected. It's like the missing link. The IFRS talks about you need to quantify the financial impact from ESG, and you need to focus on the ESG matters that are financially material. Focus on those. Okay, and lastly, I want to introduce some ACCA publications that are quite useful. So ACCA has this Excel worksheet. Very good. When I downloaded it, this is good stuff. So yeah, you can go to this website. Once you receive the slides, you can click on the link and you can download IFRS S1 Excel worksheet and the S2 worksheet. So this is very good in my view. Then there's step by step on how to use the worksheet This is free worksheet, no. Okay, and there are some, basically, just to round it up, no need to round it up. Round it up by saying, because I think otherwise ACCA kill me, please consider the professional diploma in sustainability offered by ACCA. I'm sure it's good stuff, and you will only benefit from this. I've done the plug. Back to Sharath.
Thank you, Pam. Sorry, it took me 5 minutes to move from the back. All right, so let's do our panel session. Can I invite Pam to take a seat? Sazrin from Bank Islam, okay? And Fang, okay, from EY. So there's a lot that has been unpacked by Pam. Everyone got a mic? Sazrin has. Okay, that's fine. Sazrin. Okay. I'm not sure if people can see us from the back, but I'll do my best to try and get to you. So thank you, Pam, firstly for that sharing. I mean, the slides will be provided to you because I'm sure there's a lot that has been unpacked there and that you want to spend some time looking at. So before I begin, and I'll start with a question to the panelists, I hope you'll get ready with the questions that you have so that we can take a couple of questions or 3 questions at a time for the panelists that are here. So I want to start, Fang, with you because, you know, with EY, you have worked with the regulator on the NSRF. You also have clients that you're supporting in terms of this whole sustainability reporting journey. Maybe if you could share some perspectives around maybe some of the challenges clients have faced, some of the lessons learned that, you know, people out here would benefit from.
Okay, a very good morning, everyone. So my name is Fang. So I'm the director from EY, Climate Change and Sustainability Services. I'm also an ACCA member. Yeah, just to introduce as well. Okay, so when it comes to the adoptions of the IFRS S1 and S2, I mean, from the EY perspective, we have also supported a number of the clients in different sectors, like I would say. For me, I personally involved in the clients that in the financial services sectors for banking and also insurance. But we do also support some of the clients that in, for example, like utility, property sectors. So what we have observed so far in terms of the readiness for the ISSB S1 and S2 adoptions, I will put it in the different perspective when it comes to the readiness for different sectors also. So in general, the first things is, of course, the challenges will be more on the data. So if you look at the requirements that from the ISSB S1 and S2, altogether, I'm not sure whether everyone here have read through the full requirements like from the standard itself. There are altogether 300 overline items that in the requirements. And in terms of the interpretations, I mean, in fact, when we advise our clients in terms of whether you have meet these requirements or not, we need to read through the line-by-line requirements. So the interpretations of the standard is also one of the challenges that we have actually observed, given that prior to the ISSB S1 and S2, you do have different kind of international standard. You have GRI, you have TCAD, you have SASB. So when some of these, after they consolidated into the S1 and S2, so what would be some of the interpretation when it comes to the standards requirements? So that will be one of the key challenges that we have seen. Then the second one, of course, is the data that I mentioned. So the data, if you look at the 4 key components that in the S1 and S2, which is governance, strategy, risk management, metrics, and targets. So from these 4 pillars itself, you would require a lot of data that perhaps from different division and also the departments within the organization. So how would some of this data is being able to consolidated? That will also be one of the challenges. In fact, for those that large conglomerate, I'm not sure whether here got any representative like from the company that you are not only doing one business activity. In your large conglomerate group, you would have probably different sectors that will be you will need to also be reported because it's material when it consolidated up to the group. So it's no different from any of the financial reporting because for your sustainability reporting, eventually you also need to cover all your main subsidiaries. So if your subsidiaries is in different sectors or different division, so you will need to incorporate and also look at the identifying the risks and opportunities, not only on one sector. So probably you are doing more than the others already. People who do one company, you probably need to do like 5 equivalent of the companies because you have 5 different main sectors that within the group itself. So that will probably even take up even more challenges from our perspective. Yeah.
And how are they overcoming these challenges? Or is it
They are
work
still in the
progress?
process. So now, given that some of them will be in the group 1, so what they are currently doing is, first of course, is identifying and assessing the gaps, whether which entity within the group have they started when they look at the sustainability risks and opportunities. Yeah. So now the first stage is really looking at the gaps first. Yeah.
Okay.
Because they don't have much time for them to fully adopt by 2027. It's about 1.5 years. Yeah.
Okay.
Thank you.
Before I turn to Sazrin, I just have to say that the conversations here today are going to be real. So some of these issues are issues and we don't have the full known solution yet, right? And that's going to be what you'll hear. If you're expecting that everyone has figured out all the solution, then we're living in parallel worlds. So I think, Sazrin, you have started your adoption journey much earlier, albeit at different frameworks. Now you're transitioning to S1, S2. Maybe give us your thoughts on how you've taken that journey.
So this concept is pretty much similar with what you see out there. We have ESG, we have UNGC Global Compact. But what makes it different is the underlying moral compass, which is anchored on Sharia. Okay? Moral compass is based on Sharia. That's how it is different from any other concept. So by embodying that strategic concept in our strategic pillars, so we are starting to act sustainably, not just report sustainability, or classify it, or okay, this one must be financial capital, this one is national capital. It's actually embodying, started embodying the practices of sustainability then since 2018 and 19. So that's when Bank Islam developed 6 pillars, strategic 6 pillars. Fast forward to 2022, Bank Negara issued policy document for climate risk management scenario analysis, CRMSA. That's essentially DCFD. That puts climate-related matters center stage. So suddenly everything zooms into climate and technical, it's detailed, and that's how we have gone through that transition to the ISSB. So, to be frank, we are at the early stages of ISSB transition, but I must say that we have built a strong foundation in the past 2 years, by adopting the recommendation by TCF disclosures. So that has built our internal, how should I say, internal understanding and the requirements for climate disclosures. Another point I wish to add on is that ISSB S2, climate related, as how Fang has explained this earlier, is largely consistent with TCF. So that has naturally positioned us, like Islam, as a financial institution, in that position to start aligning with the ISSB S2. So that's one thing that we look at, and internally we are focused on identifying the remaining, how should I say, the remaining gaps, improving data quality, as well as capacity and capability building, especially in the respective fields in risk, finance.
Thank you, Sazrin. And I think you've mentioned an important point. So just yesterday, and I don't say this to demonstrate any clout, but yesterday I had the privilege to speak at the ASEAN Finance Ministers and Central Bank Governors meeting. And I took that opportunity to highlight that sustainability reporting is not about reporting per se, right? And I think Sazrin has highlighted that very clearly, that it must affect your business model, it must affect your strategy, it must affect the way you think in the decisions that you're making. Otherwise, we end up like a very compliance mindset, just to get things done, get things over with, the minimum that is expected, and that's all. So I suspect this is going to be one of the clashes that will happen as we evolve in this journey. But enough of what I have to ask and I have to say, so I'm going to now turn it to you as the audience. Let me just take 2 or 3 questions that you have, and then I'll pose it to the panelists. Come to you in a minute.
Thank you. I actually have a question to Fang, because just now raised a very interesting point, which is on the conglomerate. So, for example, conglomerate reporting. Yeah. So imagine that, because there's quite a lot of large corporate client, they do have a couple of different business portfolio within their subsidiaries. So for example, there's 5 different business, and then should their five business materiality should be reported inside the annual report? If that's the case, so I would imagine right now their report is already, for example, 100 pages. So if they need to report an additional 5, then it will become at least 4 to 5 times. So maybe what can I predict would be, among this business, they will only need to choose the highest business revenue or materiality, and then choose to report. Yeah. Let us know your thought.
Yeah, I got.
Before you respond, I just want to take a couple of more questions. He had his hand up, but after this, the male quota is over, so then I'll come to you.
Thanks, Sharath. Good morning, David Tay. I think the question will actually apply to like Pam and Fang or Sazrin. There's a few things. So like, for example, like for S2, right? You know, in the guidelines, they actually talk about S2 doesn't actually require companies to have a climate-related targets. And it also doesn't require companies to have a greenhouse gas emission targets. So would that sort of defeat the purpose of having IFRS S2? I mean, that's one. Then just quickly, Sazrin, I think this is something very specific to Bank of Big Slum. Your 52 million loaned. How does it actually pass through CCPT and also IFRS S2? I mean, of course, I understand the banks, we talk about mobilizing finance to talk about all this climate change, all that, right? So I think it would be good to learn from that. Instead of just reading from the news, that's like one side story, right? So I think it's good to learn from your experience in terms of like the 52 million that was actually go to like Pahang development. How does it actually go through, you know, the CCPD, especially you talk about, is it 400 GP3, and then you also, how do you do your IFRS S2? Because that exposes your bank's climate-related risk as well. Thanks.
Okay, just on the second question, maybe we would avoid the transaction specific, so that she doesn't get caught by Bursa for disclosing non-public information. Should I just take one more question from her and then, so we address 3 questions at a go.
All right. This to Pam is regarding the non-listed big company. The definition of that, because it's 2 billion and above, but those people who, for example, if that non-listed company, what they have is actually all public listed. Underneath is actually public listed, a few public listed companies. Then what is the point of these big non-listed companies reporting? It is like redundance, right? So does it apply to them, or is it only apply to those big non-listed corporation that doesn't have a public listed company? Yeah.
Okay, let's go to the conglomerate question first.
Okay, so back to your questions, Theo. So in terms of the large conglomerate group, typically, similarly, when you prepare your sustainability reporting, so you were actually looking at what will be the boundaries and the scope lah. So if the subsidiaries is material enough that it will be consolidated up to the group, so my view is it will need to, when you assess for your material metals, then you will need to consider for those entity that will be materials to the whole group itself.
And just how do you determine that the subsidiary is material to the group?
Typically, if you look at your impact to, let's say, climate or sustainability, so if they do have there's no much, you need to start to identify and assess first lah. That's the first steps of it, yeah.
If I may add to that, so for conglomerate financial reporting under IAS 8 is the operating segment. So that part need to tie, I feel. So in the financial statements, they are already operating segment defined in the financial statement itself. So the sustainability reporting cannot run from the operating segment.
Which is why we emphasize that point about connectivity.
Connectivity.
It was a little fast because we were running out of time and wanted to reserve questions for you all. But understand that, can I just be maybe a bit critical? I think some sustainability reports in the past had grown out of its own. And then the connection with the financials was not clear. And now we are suggesting to you all, be explicit about making the connection, but also be careful if you don't, it may get called out. So just to put that point, yeah? So it's important to do it. So we go to the question, I think on...
Yes, I did catch your name. David from? You. All right. Okay, that transition specific, I'm afraid I will not address it, but what I would like to encourage for everyone in this room to, there is already a response article that I wish for you to refer to, and I would like to encourage everyone to validate the source of any news that we came across. We're going to put it at rest. On that note, if I may, Sharath, take the opportunity to put forth, is there anyone from Bank Negara here? Because the gentleman earlier spoke about some sectoral exposure in Bank Islam and for banks specifically. So one enabler that can support this transition to ISSB, while we can appreciate, I really commend the steps taken by Malaysia by taking on this NSRF and alignment to ISSB has provided that clear direction. For Group 1 member like myself, it is a clear directive and we have that clear intent to adopt, sure. However, with like any other implementation, we do require specific practical sector-based guidelines and for effective implementation. Now, in Malaysia, this can be further improved where there is more support needed at the local and institutional levels. I'll give you an example. For banking sectors, we have to disclose finance emissions, transition risks, climate-related scenarios. So these matters are complex that require tailored tools and examples. So one one example that I can draw upon, that's TCIP. Now, they've done this quite well, if I may support, is that they provided sector guidance in their TCIP guidance reports that now banks, like myself, like ourselves, or even corporates for that matter, I come to corporates later, that we will know what a good bank would look like in our disclosure. What does it mean to look good? So that's that sector, that's practical sector-based guidance. Coming back to home, in Malaysian context, we have something called the BBI assessment framework. Now, that BBI assessment framework has given us about 9 or 10 sector guides. And it is developed by the BBI Assessment Framework Community of Practitioners, by the IBIM, Association of Islamic Banks and Financial Institutions. It is there for use. It is a solid way, a solid foundation for us to move on for a better guide, for a better practical sectoral guide in how we adopt S1 and S2. And if only the next thing forward is to actually align the sectoral guides. We have palm oil, we have renewable energy, we have efficient energy, transport, construction, waste management for that matter. Align these sector guides to the requirements of S1 and S2. So it is there for our disposal. So
yeah, I agree with Sazrin that the sectoral guide provided by the value-based intermediary is very good. It's excellent, but it's just that the BVI wasn't
enforced enough.
Wasn't enforced.
And it's a very detailed assessment.
So
Yeah.
while it is, you may think that the BBI sectoral guide is just for banks. No, it wasn't just developed by bankers. It was a collaboration with industry experts. We had SEDA, we had WWF developing, and we worked with NPOB for palm oil sectors. So I was personally involved in the palm oil sector. And another one that Bank Islam took on was waste management. So these are really some solid foundation to work on. And while the banks can actually utilize this on how we assess sustainability adoptedness or ESG adoptedness, specifically climate-related matters adoptedness by the clients, that is also a good lens. That would be also a good lens for corporates or companies to look at how banks will assess me. What do I need to do? What are the parameters that bank will look at? So I think it's very, very, those sectors are very useful.
I'll take the question from David earlier, whether transition plan or targets are required under IFRS S2. Okay, so IFRS S2 doesn't require that you set a target. Just like Bursa also doesn't require you to set a greenhouse gas or any ESG related target. Yeah, so that's the dilemma, right? Yeah, so there's no requirement to set target. So what IFRS requires is that if you have such a plan to reduce greenhouse gas, then you must disclose the plan properly. Hopefully based on the transition plan task force. If you have such a plan.
Can I just take an opposite view? I think an international standard setter cannot require the setting of targets. That must be done by national policy makers, consistent with whatever strategy it is for that country. What ISSB has done, I think is right, that should you be required to set targets, then you got to tell me everything. But if you're not required by we doesn't talk about it by your local national government, then you don't, right? So it doesn't superimpose a requirement, which I think is fair. The question is now for the national policy makers to now realize, now should we? All right, should we? But this is an evolving space. Take it that way, because we are in 2025. By 2030, we do not know what additional policies will come through by the government. I would only hope that, generally speaking, as accountants, we look at historical trend. And I think when we tend to do policy making, we tend to have some objective and intent in mind. We don't turn off the tap and turn it on tomorrow like that, right? So there's some method in the madness. There's one more question about the
Company, right? The lady here. So for non-listed companies that has a group revenue of 2 billion, there's not much definition provided. So if based on what you mentioned, there's a holding company that holds a few listed companies, and on a consolidated basis, that private company at the top prepares consolidated accounts and it has more than 2 billion, then it ought to also issue the sustainability report based on IFRS S1 and 2. Just seek information from the listed subsidiaries.
But it is redundant.
It's redundant, yes, I agree.
Again,
Right to SC.
if I may provide an alternative point of view, Petronas is in that category.
Yes, that's right.
So can you imagine if Petronas did not have to disclose? I'm talking about the Petronas. Petronas Gas is listed, they've got so many other companies are listed, but the national oil and gas company would have been excluded from this ambit. Just as an aside, when the Securities Commission and the advisory committee had proposed S1 and S2 in Malaysia, there was a consultation period, right? Can I just ask it, and please don't feel embarrassed about it. Can you just have a show of hands, how many of us responded to that consultation? Okay, all the Budak Baik somehow sitting in the front, no one at the back. Now there's a reason I say this, because I'm in this space, right? Although I'm in ACCA. But if you all have an issue with the standard, you need to address it. There is a policy mechanism called the consultation process. That is important. Even if you think your company is too small, there are trade groups, there are industry groups, figure out. But it will address issues that you have. Because once it becomes standard, it's very difficult to change it. You can complain all you want, but it's water under the bridge. Okay, next 3 questions. Okay.
Hi, my name is Nana. We facilitate companies, helping them with sustainability disclosure reporting and materiality assessments. So my question is, there are a lot of companies out there that have already completed impact materiality assessments, based on GRI or previous versus standards or other standards out there. What is your advice for those to transition to this IFRS materiality without reinventing the wheel? That's my first question. And I guess the second question is, what is your view on a double materiality assessment for these kinds of companies when we don't have guidances available for this region, for example, like the ESRS? Yeah, thank you.
Excellent. Fortunately, I asked them that question in our pre-brief, so they will answer that. Anyone else? Okay. No, actually, I was just joking about the male quota earlier, so the guys can ask.
Hi, Ayn here. This is just a basic question, pardon my limited knowledge. But I think NSRF goes beyond just the S1, S2 reporting, but also assurance. So I was wondering, like for me, I would fall under Group 3, because we're one of the GLICs, but we're still bounded by the Company Act. So I was wondering what happens if we couldn't do the reasonable assurance in 2027 and we're still at limited assurance level. What happens then? Are there penalties or something?
Okay. One more question. Seems I'm at the back. Okay, now how do I reach you? Inclusivity is very important.
Thanks. Good morning to all of you. Many of the Malaysian companies, I think, they have been adopting GRI as part of their reporting framework. So how far are we from ISSB? GRI and ISSB, what's the gap? Second question, some of the company, I think they are also producing integrated report. Okay, like my company, we have started to produce that report since 2 years ago. So once we start to produce ISSB, do we still need to produce integrated report? Does it have any value?
Great question. Okay, you don't have to wait for me to come back. It's taking a while.
Okay. Maybe I will answer the materiality first. Okay, so for now, I believe that a lot of the organization, you would have already done your maturity assessment. I mean, if you are listed, most likely you will be doing the maturity assessment more on the single materiality, which is on the assessing on the impact. So I think when you move on to ISSB, when you look at the financial, I mean, eventually we'll look at the financial impact. So that's where that you would see that we started to also looking at the financial materiality, which is the other lens of the double materiality. So, but a lot of this financial materiality, even if you see currently, it would also look at how would, for example, all these sustainability matters actually would impact to the organization. So it's an outside-in perspective when it comes to the financial materiality. So from our view is, for this financial materiality, you are right, there's no specific local regulations or framework that specifically talk about double materiality at this point. Even the NSRF, they will just mention about financial materiality. So we always encourage that if you were to move on to S1 and S2, there's also, you need to start to have a needs to start to look at the financial material, because eventually you will need to assess and see that how would this material matters, for example, if it's significant enough, how would that be causing a risk or even opportunities by each of these key material matters, how would that impact to the organization? So a lot of it, if you even see those that have been disclosed so far, there are a couple of the listed company, if you look at their report, they actually have already disclosed, but they are all more on a qualitative basis, which means that their financial maturity, the assessment itself is still very qualitative based. They have not gone down to the level that showing the dollar and cents yet. Yeah.
Pam?
Yeah, if I can address that, I think that question is key. It's the $1 million question, I think, the materiality, because actually there's no answer, no guidance here, and in Malaysia. The double materiality is Europe, so the only guidance you can refer to is Europe. You have to see how the MNCs have done the double materiality, and you are wondering, as a Malaysian company, should I go down that path? Very difficult there, the double materiality. So if I can just summarize, so at the moment we have done the materiality assessment, right? All of you have 12, 13 topics, right? About that. So what the NSRF IFRS want you to do is that out of these 13 topics, which one is financially material? For the ones that are financially material, we have got to quantify the financial impact and quantify the risk and opportunity, just quantify. So you want to do for all 13 topics, or you want to shortlist certain topics that are, that you want to do the risk and opportunity assessment, that you want to do the financial impact. So I think that whole process itself is actually also financial materiality, So I'll suggest you maintain your 13 topics. If previously you have 13, 12 topics, you can maintain them, and you decide a methodology within your company now on which one for the purpose of ISSB, IFRS, or NSRF, you want to take it out and just do additional work to quantify the financial impact from the risk and opportunity. Maybe you decide that out of your 13 topics, 5 are financially material, and because that 5 is material to the management, the users of financial statements, the investors, the creditors, they are interested in all these topics. And then you can, for that 5 topic, climate, let's say, or data security and all that, you will do extra effort to quantify the risk and opportunity and the financial impact. So, but you have to explain to your board what's the basis. How you select that 5 out of 13. If you don't have basis, I'm afraid you have to do all your 13 topics, you go and quantify the financial impact.
Actually, if you refers to which one that you want to start off, which materials that you would want to start off with first, you can actually refer to your, of course, as a company, you would know that which material matters will be more significant to you. But as a benchmark, there's also an industry-based metric, the ISSB. So you can look at in general, for that sectors that you are in, is this material, the matters that they mentioned in the ISSB, is it aligned with your company as well? Most likely, I will tell you that it will be aligned.
Just a quick check. Are you all familiar what Jeffang is talking about in terms of the SASB.
Yeah, so for example, just now I think you show the real estate sector, right?
Real estate
Yeah,
sector
so
has
there are
10 topics, and that 10 is, in a way, automatically IFRS say that they are financially material. These are the topics that you need to include, and you need to do the financial impact.
Yep.
But you can still argue, say this one not relevant to my company,
Yeah,
you know?
yeah. But at least you have a base to refer to for the same sectors, lah.
And these are in the appendix to S2.
The SASB is maintained separately.
Yeah, they maintain separately.
Okay.
You download the 77 industries separately, one by one.
Okay, see, you all seem to know even better than I do, so very good. Yeah.
What's the IBG? Industry-based guidance in S2, they put it in one document. But SASB standard is maintained
Separately.
You only need to know your sector. Just download that one sector, or
Okay.
one or two or three.
I think that's a safe assumption. People will know what sector they are in. Before we address the question on the reasonable assurance, can we go to that question on the transition and then the integrated report? So if someone's already on GRI, I've been reporting on GRI, and I'm looking at you, Sazrin. Because you've done it. So how would you transition? And then, given that difference in the way you look at materiality, how do you do that transition? And because you've also done integrated report, now what does that mean? Okay.
To that gentleman, that question really triggered me. That I can really relate to that question.
Can they hear it back?
Can you hear me from the back?
Okay.
So I'm going to just go back to history. Just a bit of allow me some time. When we adopted the integrated reporting in 2017, it was, again, it's a reporting tool where we have to identify what are the capitals, our input, what will be our tactics, initiatives, strategies. Those are our enablers in producing an output and a measurable outcome with the impact to the stakeholders. So you can imagine that spread, that illustrative diagram of how the business model will be. Now that remains a business model. And we initially adopted GRI for sustainability reporting. And in that annual report, we had that integrated reporting model. We also provided the required indicators per GRI. So we were also guided by GRI. That remains. Fast forward to 2022, we had CRMSA and TCFD. So we managed to disclose at least the basic phase of JC3 standard of application with some partial disclosure for stretch targets in 2024. So those 2 years, like I mentioned, was crucial for Bank Islam to transition into S1 and S2 like disclosures, because essentially S2 is largely consistent with TCFD. So your question on how it transcends, okay, how it started with annual report, integrated report, okay, that's a business model. Always have it, it's a business model report. GRI are the indicators that you want to, the material, the key indicators that are key to your nature of business to be disclosed. Come S1 and S2 is an extended disclosure on how we disclose how a company practices its governance, risk management, strategy, and matrix. So that's the transition that we are going to. As I mentioned, we are in early stages, but because of that strong, solid foundation that we had in the past 2 years, that has put us with a bit of advantage to align ourselves with TCFD principles, which are essentially pretty much S2. Now, and if your question, do you still have to do integrated reporting, GRI, and when we disclose S1 and S2? Yes, of course, because S2 is an extended, remember, like what Fang said, S2 is specifically on climate-related disclosures. So you've got your governance. So we have, internally, we have also been able to embed these disclosures, these pillars of governance structure, risk management, strategy, as well as, and we're now we're stretching ourselves to disclose advanced matrix as well as forward-looking disclosures. That's what we have. The direction is clear and the intent is clear as well. So I think we are somewhat on the same boat. So there is no question about, okay, we don't have to do an integrated report. It is a business model disclosure. So I hope that provides some clarity.
Well, can I be the ignorant one? So let's flip the scenario because you already started with integrated report. Let's say I'm doing it for the first time and I'm just reporting under ISSB S1 and S2. Do whatever I do, does that qualify to be an integrated report? No. I hope that you got that answer, right? Okay. Now, if I do ISSB reporting and then I want to do GRI, because it's not required, but let's say some other stakeholders are expecting it, how does that take place?
GRI is a list
Indicator,
of
indicators only, yeah.
indicators that can support or strengthen your S1 and S2 requirement based on what your nature of business are, which industry you're in. I'm in banking, so I'm very clear what my key indicators are, both for, not just for S2, but also for S1. Remember, we're not just disclosing climate-related matters, but also other sustainability matters. Pam has rightly, she was spot on when she said cybersecurity, any breaches of data that we have. So those are indicators that are listed under GRI, but also required by Bursa because we are listed.
Okay, so in the slides, I think Pam, in the interest of time, had to move it a bit fast, but we look at this as building blocks. And so the ISSB standards are if you want to start actually with financial reporting, the IFRS accounting is your lowest block. The ISSB standards then are the higher block on it, for which then you can layer GRI if you choose to report on GRI. But the NSRF does not talk about GRI. So I don't want people to get confused that you have to report on GRI. NSRF is only about ISSB. But I'm saying if in the past, and your board wants it, or some other stakeholder that you're working with is expecting it, it can layer on. It is not inconsistent with ISSB standards. I hope you take that message back. Yeah. Now can we move on to that wonderful question about reasonable assurance?
Maybe I can ask the audience back first. How many of your companies now have actually embarked on limited assurance? Because the NSRF requirements on the reasonable assurance is on your scope 1 and 2 emissions. So how many of your companies now actually have your scope 1 and 2 emissions is being assured, but it's limited lah? Any? Okay, quite a lot. Anyone have?
How many have assurance but don't want to raise your hand? Okay.
Yeah, so, but how many of you here, your company have disclosed scope 1 and 2, but not getting any assurance yet? Probably only internally assured, not externally assured. Okay, so there are also a couple of here. So this group of people, maybe they internally prepping for assurance, but they have not ready for external yet. Is that the reason that you have not gotten external yet?
Some yes.
Oh, some yes. Okay. So the difference between limited and reasonable, I think you can also add on later. So from the limited perspective, typically what we will be doing will be more on inquiry and also looking, let's say you take scope 1 and 2 as example. So I will inquire that what's your process in terms of obtaining the data inputs up until the data outputs, that how you derive your scope 1 emissions, for example. So, but of course, we will also be looking at you have a completeness or not based on the scope 1 and the scope 2 of the company, based on the completeness, whether is it like the things that you disclose is complete. So it's more on inquiry as well as analytical review, which means that if last year to this year there's a huge increase or decrease in terms of your emissions, so typically we will inquire the company that why there's such a movement. So probably you have open new branches, for example, and hence you have a higher emissions for certain years. So, but if it comes to the reasonable, then typically we will also perform additional, I wouldn't say additional, it's more it's a higher level, slightly higher level of the assurance, and hence we will be performing like test of control. We will be selecting samples, and from that samples, we will check to the source document and see that whether is this aligned to what you have actually done. So the process, when it comes to our, as a party that assured that numbers, the process that the work done that we will be doing will be a slightly higher, more procedures that will be performed. And hence, that's why the reasonable assurance will be a higher level of the assurance as compared to limited. Yeah. So if your question is whether if you're not ready for reasonable yet, I think when it comes to when you assess your readiness for now, you should already start to look at all your processes ready. I mean, given that you know scope 1 and 2, it requires to be a reasonable assurance. So from now, when you start to look at your how you collect the data and whatnot, you should look at the whole process at when you gather these informations. So when it comes to the year that, because if you are in group 3, if it's 2027, but the assurance will come few years later. So you even have a few more years to be prepared for the assurance itself. Okay.
Does that answer your question? Okay. So there is words used, limited assurance and reasonable assurance. From a financial reporting perspective, we are already doing reasonable assurance. We call it audit. Yeah? So, and I'm not joking when I say this. So the word reasonable assurance and limited assurance is by reference to certain standards. We don't have to get into those details, but therefore, to say that one has done a limited assurance or a reasonable assurance, it falls back on the performance of those standards, which are issued by another body, right? So I agree that, you know, what Jafang is saying is that where you have that time, start building your process and your controls over these disclosures. And, if I may say, the connectivity with the financials. If you have an internal audit team, start asking them to look at these things. They actually tend to be even more exhaustive and thorough than the financial auditors, your external auditors sometimes. So it's a good place to start. Having said that, and Jafang, you can keep me honest, in the NSRF, there is a consultation period that will be opened for the proposed use of reasonable assurance. So they will ask, there will be a consultation. So when it comes out, please get involved. I'm not saying get involved in the sense of pushback. I'm saying get involved to express your concerns, because maybe there needs to be guidance and enablers or a longer timeline. I don't know. But in the typical Malaysian context, and I must say also in ASEAN context, we don't tend to get involved in consultations. And so then it becomes standard, and then we do what we always do, we complain. So that's not going to be a solution going forward, I think, yeah? So
yeah, I mean, in fact, just to share that the timeline for the reasonable assurance and whatnot, is actually, there's some stakeholder engagement that we have engaged before when it come up with that timeline. But of course, it will still need a public consultation to gather everyone's feedbacks. Yeah.
okay, we still have time for another round of questions, since you're right in front. And one at the back. Okay,
Hi, thank you. I'm Shirley from AIA. So we've been talking about connectivity, materiality, and quantification of risks and opportunities. So let's say we've done that quantification, the materiality assessment, and now we've determined, okay, so the quantification of my risks is 10 million. So what do we do with that 10 million? Do we connect it back to our financial statements? Do we set aside a provision for it? Do we put in additional capital for it? And by which date? Because when we're talking about climate risks, it's forward-looking, it's by 2030, 2050. But accountants, we are historical, we need to have proof. So yes, we'd like to seek your views on that. Thank you.
Interesting question. I actually have a follow-up question for you, but let me go to the, how do I cross this? Throw? You have no idea about my accuracy. Can I try and get it halfway and then someone help me? Could you help me just pass?
Okay, thank you so much. So I have like a relatively more technical questions. So like for like S2, we're required to do the scenario analysis. So my question is like when we do like under the S2, when we do the quantification part, do we need to always also consider the scenario part of the quantification? So for example, when we're calculating the carbon tax part, there's a carbon tax under different scenarios. And then when we do the quantification, do we need to apply the carbon tax under different scenarios to get the quantified result? If that's something required, is that also required for the S1? Because for the sustainability related quantification calculation, so like for like we know like for the climate related scenarios, we can find for the carbon tax from NGFS, but there are not much scenario parameter available for sustainability related topics. And like under that kind of like not scenario data available situation, how like what's like a bare minimum required by both S1 and S2 to the quantification part? Yeah, thank you.
Anyone? This side? Going once? Oh, there you go.
With regards to the external assurance side, quick question: who can assure it? I mean, what would be the parties? Would it be the big 4 and 5 that includes Crow, or does it include SGS? What about the BSI? If not, Serum 55, because I can see from some companies, they're getting assurance from every other company they think they can do. I'm from UNC Malaya. When we're working with Ministry of Economy, they're saying that these companies should not be doing it. But of course, the standards are not there. Then it's deemed that someone who knows the stuff can do a second verification.
Great questions.
Sustainability-related topic like data, cybersecurity, data privacy, diversity, health and safety, there is no scenario analysis needed. Okay, so only the climate topic, you will have carbon tax impact under this hell scenario and heaven scenario, you know. If we go to heaven or we go to hell, you know.
Yeah, so basically if you look at the S1 and S2 requirements, S2 specifically mentioning about climate scenario analysis, but S1, they never mention about scenario analysis itself one. Yeah. So yeah, back to the questions that typically for the, who is asking, is it from banks? Yeah, so if let's say it's from banks or insurance, for example, you would already done your climate risk scenario analysis or even stress testings. So from that scenario itself, you would have the quantifications of the financial impacts to the banks and insurance companies. So do I need to use that number to actually put it into the financial statement? There's not a requirement for that, because that's stress test itself is just, I mean, for now, of course, is to give a view that how much the banks and also the insurance company, financial institutions, your exposure, your portfolio itself, how much does it expose to the high-risk sectors or areas. So what you can actually do, like while looking at all these things, because the stress test and the scenario analysis you have done is already projected to 2050. So you have all the result for the projections of the financial impact up until 2050 already. But of course, this exercise, it will still be ongoing and also refined because of the data that everyone is using. Perhaps it's also slightly different in terms of the data for physical risk, for example, and also the carbon tax and whatnot. So I think the part that whether some of this information, how would that eventually impact to the financial perspective is more on probably you need to look at specific sectors or specific clients, customers that you have that is really at the high risk one. And you actually have projections of the additional provisionings for that. So that you can actually include it into your financial account, financial statement. That's, we have seen it before. That's for banks that because of the exposed to, let's say, oil and gas sector or some coal sectors, so additional provisioning was actually provided in that case. Yeah.
If I may add to that, we have done that climate and scenario analysis exercise. Before you consider that that amount to be provided or not, just making sure that you are also taking into consideration the specific customers' decarbonization strategies.
But I suppose it also takes into account, although you say it's historical, but then, you know, Pam had these wonderful charts at flood-prone areas, right? So, yeah, so some of those are not necessarily a 2100 scenario. It could be 2030. It might even be now. And so then I guess the questions for you all to ask is then, is this a liability already, or is it an akan datang liability, or, and then you have to make some determination. I think connectivity goes just beyond that, because if you have a sustainable report and you talk about these disclosures, but it doesn't connect it with the assets, say you've insured or what liabilities you have, I think that connectivity, that storytelling is now needing to come out a bit better. Not that you have to do, correct me if I'm wrong, future value, cash flow for everything that you think is a risk, and then do some kind of discounted cash flow and whack it onto your balance sheet. That's not the meaning of connectivity. Am I right?
Depends, does it affect goodwill? Is it a goodwill impairment or asset impairment test? Then the climate risk might affect impairment test.
Okay. And then the question on assurance provider, I think. So there's a question. So you need to keep your neutral hat on, Jiafeng, because is whether who should be assurance providers. And if I just paraphrase, I think obviously the big four in the race, but now there are others who are already doing it and have been doing it under GRI and all of that. I don't want to use the reference to those ministries, but I think there's also a question from the one who is being provided. What assurance do they feel from the provider? And then I can tell you our view in ACCA as well, but I'll turn it to you first.
So I think there are still an ongoing discussions on this in regards to adopting the ISA 5000 as well. So when that kicks in, then it will be have a clear directions that who can actually assure. Is it just accounting practitioners, or actually including those that non-accounting practitioners as well? So this is something that is still ongoing discussions on that. But at the current stage, before all this ISSB and ISA 5000 kicks in, you can see that it's not only the big four is assuring, there's also some other ISO, I mean some will get ISO certifications as well as external assurance as well. Yeah. But when the ISA 5000 kicks in, it's supposed to be standardized across who can actually assure on all these sustainability informations.
I mean, add on, share what I understand. We started with limited review by our own internal audit, and we moved on to, we are looking to do reasonable assurance, but again, by our internal audit. So we have talked about what Sharath mentioned, get your internal audit in ahead of time, not wait for the get them involved, get them trained. That should also form part of your sustainability learning framework and capacity building in your organization. So it has to be an end-to-end approach and assurance. Interestingly, as Jafang said, not the government is not necessarily confined to this aspect providing insurance. I'm also seeing those of you companies who have who are rated by rating agencies. We are seeing interest in rating agencies to provide such services, and they are also investing in those capabilities such as
Pam, you have a view?
The audit space is definitely been opened up already to accountants and non-accountants. I know this is ACCA hosted, non-accountants, but non-accountants can also do the sustainability audit, the likes of what I have mentioned.
Okay, so it might interest you from an ACCA standpoint that we also acknowledge that this is a space that can be provided by accountants and non-accountants, but with a qualifier. And that qualifier is, let me take a few steps on this. Firstly, Jafang mentioned this ISA 5000. That is an audit standard. And it means that whoever who is not an accounting or audit firm who provides such services must still perform such services in accordance with that standard, number one. The second one is, if you think of any audit firm now, okay, especially Big Four, but even those who perform audits on public interest entities, right, who are subject to the Malaysian Audit Oversight Board, a critical part of reasonable assurance is that that firm must have a quality assurance system process. So that is why auditors get audited. That is why AOB exists, because when the audit fails, someone will catch that process. Now, whoever is going to audit you on your sustainability disclosures, perhaps you need to ask the question on the strength of their quality assurance. Not just how many clients they have done, which is important, but also what is the strength of their quality assurance mechanism and process. It might include peer reviews, it might include external reviews, but you have to ask those questions and get the comfort from there. The reason why the accounting firms and the Big Four firms are a little ahead is because they're used to it. They've been doing this all along, and they've been subject to scrutiny and getting slapped and whacked, you know, by all kinds of things, including in the press. So they have that quality assurance mechanism. And I'm not doing an advertisement for the Big Four. I'm saying it, this is the rigor that needs to be expected of someone who provides assurance services. The third thing I would say is, and this is very highly contentious, I think it is easier to perform an audit, reasonable assurance, on a set of financial statements. It's like drawing a box and you know exactly where the boundaries are. With sustainability disclosures, we're only just talking about climate. We have not moved on yet to natural capital and biodiversity and ecosystems, which is coming, and also the human capital side of things. So just for your knowledge, the ISSB, the standard setter, is looking at two research priorities. One of it is biodiversity and its ecosystems, and the other one is on human capital. Human capital is not necessarily the same as human rights, but we will find out when they issue those standards. And as I've repeated many times like a parrot, when the consultation process starts, get involved. Okay, Do we have time? We got 15 minutes left. Are there any other questions? No? You happy? Because CGM will send you some QR code to go and do some satisfaction survey and all of that. I don't need that. I want to ask, maybe I will ask some questions which maybe I feel we haven't touched, which is, as I said, S1 and S2 are just the beginning. What are the skill sets that we need to start seeing in the whole space of sustainability reporting, bearing in mind what we just said, that reporting is not about reporting per se. Reporting also has to have the ability to go back and question how we're running our business, what's our strategy, how we're managing the risks and opportunities around this. So if you were to look at your crystal ball, what do you think are the skill sets that we need to start developing? Can I start? Okay, go ahead, Sazrin. Are you finding that skill set? Can we come?
Yeah, so basically because I think Sazrin is from banks, so banks they have a bank in fact got a future skill set that they have actually rolled out. So before that, they actually come up with like each department, each division, the sustainability enables is one of it as part of the first, second, and also the third line of defense. So I mean, in terms of the skill set that you need to enhance for sustainability, I think it's more on in any role that you would be in currently, you will need to upskill yourself lah. Yeah.
Ma'am?
I think for me, fine. If you are from finance background or you're from risk, I love the risk people. I think right now, this ISSB, we roll out several projects. Always involve the risk people somehow. They're my favorite people now. So finance and risk.
What about the, okay, so most of you all are not from finance. So do you have a problem talking to your finance people? Wow, I don't even ask you to have to raise your hands, you all are nodding your head vigorously. So how do the non-finance folks engage and speak to the finance folks in a way that they understand each other. Pray.
Integrate.
Okay, so start training your accountants.
So basically, the finance team would also need to start to learn on all this sustainability S1 and S2 because they need to know because probably in the past, we have already embarking on Bursa Sustainability Reporting Guide, integrated reporting. So everyone will be very familiar with that. But for the finance folks, they may not have in that journey before. So then that's why we also have done some of the training specifically for finance team, just to get them to understand like what is S1 and S2 required, then how would some of these things that done by risk team, for example, done by the strategy team, the sustainability team, how would this informations eventually flow up to the financials? So they need to understand the whole process, because if they don't understand this whole process, I think it's a bit hard for them to like appreciate it. Yeah.
Thank you. Okay, regarding the finance team and all these things, how to get them interested in sustainability? Because we did have trainings to them, and what we feel as a trainer that, well, this is sustainability team matter. So they just concentrate back on their financial accounting. And the other thing is, just now when we spoke about, I think Bank Islam, it's very good that your top management, everybody is trained and aligned in sustainability. But I think there is still a lot of companies, the buy-in from top management is still not there. Or we know that the board members, they will have training every year, compulsory, but not on the operation side. Like I don't know about CFO actually. Does it have a compulsory sustainability training that they need to attend, just like the directors?
Without telling me the name of your company. Are you a listed company?
Yes.
No, that's a very important context. Yeah, please.
Okay, you were very spot on. When we started, even not the ISSB, but the sustainability journey, first thing to do is to get the board and top management. And the challenge was, before you can even tell your finance guys to attend this course, get the topmost people to say, we're going to do it. So the way to approach is that to position it as a strategic matter, not a compliance matter. It is beyond highlight to the board. It is not just about publishing a report. It is not just about ticking the boxes. It is actually a strategic matter. So how do we do that? Is by aligning it back to the company's, I have to use some raison d'être, your reason to exist. What is your purpose as an entity? So go back to that purpose. How will this support the bank's, the company's strategic considerations? So then you will shift. That will actually garner, that mind frame, that framing will, and we have been able to get strong support from top management and board by framing it as a strategic matter, beyond compliance, beyond ticking the box. Now, how do we do that? At Bank Islam, we also aligned it, and because we are Islamic bank, we are anchored on Maqasid Syariah, the protection of the 5 objectives for Sharia, protection of faith, lives, lineage, posterity, intellect, and protection of wealth. So how can sustainability, how can this reporting, how can ISSB support these 5 objectives of Sharia? How can it support Bank Islam's 5 sustainability commitments? So frame it as a strategic matter. Then it will shift the conversation from compliance to strategic value creation, regulatory integrity, and forward-looking positioning. Frame it as a strategic positioning.
If I may add to the question, because this is IFRS, so I'm actually quite surprised that the CFO is not interested. Because the board, the first person they fire this question, IFRS S1, S2, is the CFO. Yes. So far, most of my clients, all the CFO is freaking out on this IFRS. So,
yeah, and also I think a lot of our clients also asking that whether when this ISSB rolled out, whose role is this? Is it sustainability role, finance role, whose role, right? Yeah, so what we actually normally advise is, or in fact we see some of the company, what they have done, started to do is, they have a task force. I mean, when it comes to this ISSB implementation, they will have a task force. So in this task force, finance will need to be in. For sure that they will need to be in. So long as, I mean, with the task force that established, then everyone will have their own role that they will need to take when it comes to the ISSB implementation. Yeah, because otherwise they will just push here and there. I think this is sustainability, since it's sustainability matter. This one relates to financial impact, right? I think it's finance. Yeah. So you will need to have a task force established specifically for this ISSB journey.
One last question, but I do have a response also.
Good morning. Sorry, my name is Ibnu. I'm one of the assurance provider. So I'm just want to ask. Actually, this forum is very enlightening us because there is a certain concern from our clients also regarding this. This is, I would say, a transition period from GRI to IFRS. But as you mentioned, that is quite clear because the S1 and S2 will be like incorporated into the report. I think it's similar like TCFD when they have a report, separate report, but you reporting the integrated report with including the TCFD part. So I'm just asking and thinking about, because ISSB, they have a sectoral standard like ACCA, SASB, and also together with IFRS. So there is a option maybe for the companies is either they want to adopt IFRS, S1, S2, and together with SASB, or even let's say they have a GRI, they have a sectoral standard also for that. There is a 5 sectoral standard that is existing in the GRI. So is it an option if we just go focus for SASB together with IFRS, or we just go together for GRI, their sectoral standard, and include the IFRS together with it?
Yeah, I have a way to answer that. I think it depends on the company. If the company newly IPO, newly listed company, you don't tell them to do GRI anymore because it's optional. You know, you just straight away IFRS, SASB, do that, just that, and your material topics you try to make it smaller. For the ones that already reported GRI for 3 years, 4 years, 5 years, to drop the GRI, they need to go to the board. You know, they need to explain, hey, why you want to drop GRI because you want less work. So the ones that have legacy, means if you have the legacy of reporting GRI, then too bad you may have to continue to report based on the GRI and add on the workload on the IFRS. But if you are new, no legacy, you are just starting your journey today and you are newly listed company, straight away go for IFRS. Don't worry about the GRI anymore, no more GRI.
Okay, because we are coming close to time, I know you have a question, but maybe you can ask that offline. I'm going to ask each panelist to wrap up with 1 minute of anything you want to say which you haven't said. Starting with Pam.
Yeah, I said a lot. Thank you very much. It's been a wonderful crowd.
Sazrin? Sure.
the journey. It's not that, okay, I must do all this and then I'll be included. Yes, one can't avoid looking at the status. As long as there is progress, inshallah will be there. So I don't want it to be daunting. It is a journey. So there are silver linings and I'm very happy to share with you. Secondly, in this global macro landscape, as an entity, let's go back to my investor relations. At the end of the day, as entities and corporations, investors will continuously assess both their exposures to cyclical stock and defensive stock. So we are from ASEAN and from global and from foreign investors, we could be a global country. So they will continuously assess their exposures to cyclical and defensive stock. Why is that? Because not just they want to optimize, because they want to maximize the diversification effect having different mix. So this reporting, use it to the max, optimize it as best as possible to communicate your progress of sustainability for that effect of relevance to address evolving demands from your investors. And once again, I would like to reiterate, it is a journey. When there is progress, there are only winners. No losers, only winners. Us, me, industry, and me.
Okay, for me, I think it's just two keywords: be prepared earlier, and also what's the other words I want to say? Yeah, be prepared earlier, as well as make sure that you have so-called because now probably a lot of you might have already attended a lot of the S1 and S2 sharing sessions or training. I think now is the time that you need to go down to the ground and see that what the actual things that you need, because now the S1 and S2 is on reporting, right, on the disclosure, but a lot of the companies perhaps is still at a stage that I've not done this yet. Why am I going to disclose it at the end of the day? So the process-wise, the process and also the integrations into your business models and everything, it needs to start to prepare by now, I would say. Yeah. Because otherwise, if you have not started to assess your impacts to the climate or even sustainability, you will not have anything for you to disclose. Or even the things that you put up in the disclosures later, it's not like the actual things that you have actually been doing. So I think the keywords is you need to also practice it, just not to treat it just as a disclosure and compliance. Yeah.
So if I may, and I don't like to have the last word on anything, I would say that what I started this whole session is how I'm going to end, which is sustainability reporting isn't about reporting per se. It is the process by which you will start to unpack so many things in your organization. It might even challenge your business model, and that's really something that should happen. I'm really surprised also when I hear, and maybe it's isolated, that the finance folks are not involved or not interested. Because a good CFO, and you can quote me on this, a good CFO is a good chief value officer, because the value chain is fundamental to an organization. I'll leave you with one little anecdote about why value chain is important. So earlier, Pam spoke about all of these wonderful maps, but north, where she mentioned Kedah, is this Ulu Muda Forest Reserve. Do you know why that's significant? Because it provides 40% of our rice in Peninsular Malaysia. And that's a water-stressed region. Why is it water-stressed? Because the state government needs funds for its state development, and it's insufficient. Whatever ecological fund transfer the federal government gives is insufficient. So the state government goes about to do what it is. This is not a criticism of the state government. I want to be very clear. But the point is then that area gets stressed in the name of state development, but the rest of us get impacted, maybe not in terms of your work, but in terms of your diet. And if you think that's a small problem, so is health. And COVID brought everything to a standstill. That value chain thinking is fundamental if you're going to do sustainability reporting. It's not about sustainability reporting. So this is a start. You now know many people. You can reach out to them on their LinkedIn. The slides Pam shared will be disseminated to you with all of the links. So if you need any help, please reach out. And they're also here if you need to ask them more questions. So with that, I thank you very much for your patience. It's not been the most comfortable, but thank you. And I thank the panelists too.